All right, good evening, people. Let's jump in here on Ybit and Bitto. So there were a number of things that happened. So I didn't update yesterday. Excuse me. So yesterday was vanilla, not much happened. But on 7:30, um, there was shares sold. Okay, so there were 250,000. So we went from, and actually it's not entirely true. So on 29, it looked like on Monday, it looked like it added 50,000 shares, but there were no trades placed. And then on 30, on Tuesday, there were 250,000 shares sold. Okay. So what happened? Let's review the 2 days. So it was down 1.39 on Bitto on the 29th and down 0.71 for Ybit. So then come along Tuesday, we're down 2.05 on Ybit, or sorry, on Bitto. And then on Ybit, we were down 2.37. Okay. We're not capped, but the issue is more, there's a lot of things going on. First off, the shares being sold off forced them to go in, as well as they had an 8-2 expiration. So to recap, Bitto and Ybit, they, being Yieldmax, has been writing these 35. Let's go over here to holdings. So they've been writing, sorry, let's go here to payouts and you'll see it. So for quite a while, they were collecting a lot of money. But in a way, it's erroneous. I mean, I don't blame them, and I understand it by writing way up at a 35. So first off, I think they're somewhat trapped. And by trapped, I mean they're using Bitto. When they set this fund up, Bitto wasn't paying a high dividend. It was paying 15, 20 cents. Some of you have seen what I dialed up in my weeklies, or where did I do that? I did it somewhere. Let me find it. Did I do it? And yeah, I did it in holdings down here. It's not something I talk about every time. But what they've done is they went from paying 84 cents at the time over a 5-month period prior to the last 5 payouts. They paid 84 cents. So you can see that that's an average of 16.08 cents, right? So 16.8 cents per payout. Now they're paying, and 5 divided into 6.8, right? You get $1.20 plus some more. So you're averaging almost $1.35. But when they plan this fund, and Jay mentioned it in an interview just briefly, that so your situation with Bitto is big pro shares, right? You buy Bitto just like you might buy a Ybit, and you were getting a dinky little dividend, but they were using BTC futures, and it's a way to own BTC without having to go in and exchange and take custody and do all the things that you have to do to buy this crypto directly, right? Wallets and all kinds of things. And I'm in the same boat. I haven't chose that path. I've been using stock representation, right? And I really like ProShares Bitto and 2X and those, but it more closely resembles BTC because it's using the futures market. There's some swaps and then they go long. And if you know anything about futures, you can go long in the current month and they have to roll the same way these synthetics, are out a month or out 6 weeks and then they roll. You do the same things in the futures market. And then additionally, they have some swaps. I won't get into explaining swaps at the moment, but most of what they do is they stay what's called the front month, the current month, and then when it gets close to expiration, they roll into another month. Well, they're also buying some of the 1 month out and 2 month out futures as well as, quote, the front month. So that's how BITO makes its money, just by playing the futures market on the CME exchange. And with Ybit, we chose BITO because they're a very established and large fund from ProShares. Thus, they have large volume on their options. So if you go out and you buy BITO, the underlying, then you can write calls, you can sell puts, you can buy puts. There's a lot of volume for retail as well as institutional for Ybit, basing it on that. But this whole dynamic of a derivative on top of a derivative is not necessarily bad, it's just different. So they have to account once a month for, okay, how much is BITO going to pay? And then they have to adjust their options around that. Well, I can tell you that BITO will declare on 7/31 after the market, right? Typically, they may declare in the morning. I don't really recall. But I know that in order to get that dividend, you have to buy on 7/31. Now, whether they report in the morning or after, I really can't remember at the moment. I own some, but it's not a lot that I track it at that detail, and I'm busy with my channel. So to remind you, if you guys just want to fast forward this because you want to see what happened or projections for payout, I understand. But a lot of people need to know this because it's a hot topic right now. It's causing people to get out of Ybit, or there's videos out there, buy 1,000 shares of Ybit and retire. I mean, there's just a lot of nonsense out there. I think if you're bullish on BTC, this is an okay income fund. Remember, it's an income fund, okay, first and foremost. So let me finish that train of thought. So BITO is going to declare on 31 again, before market or after market, look it up. Okay, but you have to buy, and why that's important, you see what they're going to pay if it's pre-market, and the way Yieldmax does, and then you buy on that date. Because if you buy on the first, it's X dividend. That amount is subtracted out. So that very action, they're likely to pay in the dollar amount. Looking here, they've been averaging $1.35. So let's say they pay $1.20 or they pay $1.30. And currently on 7:30 close, BITO closed at 22.95. Call it 23. So if we're writing 24s, which back when BITO was 23.80, it's like, oh, you're going out a week and you're writing a 24. Well, you got $1.20, $1.30, whatever they pay. They've been paying in the dollar range, and they will do that again. But it just makes it a little harder. So all this, why is my NAV getting killed? It's even the same with Ybit to some degree. I mean, with BITO, when I bought BITO, it was close to $30. Well, it's 22.95, but I've had about 5 months of collecting this kind of income, this 682. So while I'm slightly down, I have to add all that back in. Total return is close to break even. Well, it's not what any of us want. And the same thing with Ybit, right? It's trading at, what is my Ybit? 16.85. So if you bought at $20, you're behind, but you do have to account, right, in your payouts for this $1.37, this $1.21, and whatever we're going to pay coming up. And I'll talk about that when I get over there. So I just wanted you to know all that because there's a ton of questions. I read, chat boards. It's just very adds an extra layer of confusion over, say, Coney and Misty, okay? Because they're underlying, and most tech stocks, most your MicroStrategy, they're not currently paying any dividend, so it's a non-issue. So shares were sold, okay? And so they also took this methodology of writing way out of the money, they being Yieldmax. So let's go over here and look at what happened anytime you have a redemption in shares. So there are more shares sold than bought. Excuse me. So we're now in this situation where we have three signals. I can tell you it always triggers sales. So here they are, and then I'm going to go in and show you. Okay. So with Bitto, they went out on the 35 and they closed it out. Long time coming, they needed to, right? It expired on 8/2. So they did it 3 days early, not an issue. So when you buy that call back, it's so far at 22.95 from 35, right? It's like 12, $13, $14 almost. 12, right? 23, yeah. And they had to pay 13.60 to buy the puts back and only collected a penny for selling all their calls. So then they did a more reasonable. They could have chose 26 because they only went 8.16. So I don't think it matters as much. And remember, they don't want to deplete. This cost them a lot of money. And I'm going to show you that, right? That just destroyed it for this month. You're still likely to get money. Don't worry about it. But it took a bunch of cash at 25,735. Okay, let me go show you that right now while we're talking about it. So here's our 35 position. So bought a penny. Sorry. Yes, we bought it back because we reverse what we normally do. Normally when we just put on a synthetic, we do a buy, call, sell, put. So we do just the opposite when we're closing it out. That's why I put a negative number. That takes care of it. So I still show this as a positive number and this is a negative, but when you have a negative and a positive, it's negative here and two negatives, you multiply two negative numbers, you get a positive. So we basically, you can see the difference. We lost 34,900,000 and something on that trade. But the net, because we had been making other money, okay, is a $24 million loss. Even though we took almost a $35 million loss, this is peanuts, right? We were paid 25,735, but look how close to 35 million this is. So this is, minuscule. And yet we only, because we had all this gain in June and then we had some other gains in July. So we netted 24. All right, let's go talk about the new position. All right, I did this very quickly, so I didn't fill in everything. But this was the new. We went to the 28, okay? We went to a 28 strike and we bought calls, the traditional put it on, right? And we sold puts. Now, this is a more reasonable, okay, only $4, $5, $6, right? It's $5.05. But because it's out to 8.16, we got 6.5. So we got back 16 million on the 34 million loss. So that's a net 18. And then we additionally bought back some calls where we were winning. So just wanted to walk you through some complicated steps, right? Here's the buyback, the 35. Here's put on the 28. So now we no longer have a 35, we have a 28. And it's only 816, so they'll deal with that coming up. And then they bought to close 800. They had 1,880. So now the only calls that we have in play are 1,080. And they bought those back for 5 cents. So we got 97% of the gains on that. So let me show you that final piece. I went back and I had to split out 1,880 and said, okay, I split it into two pieces. And we bought these at 5 because who knows what we'll be buying the other one, and they need to stay on the books as open. So that means that we had sold those for 32 just when you break the 800, and we bought them back for 4, so we made 28 out of 32. So 7/8, right? If you divide 4 in there, you get 8, and 28 times is 7 times 4. So we got 7/8 fractionally, okay, of what we could have achieved. No problem. Happy they took it off. Actually, they could have taken it all off. But honestly, this should be a 24.5. I drug it down and it jumped up. Okay. It's not affecting any of the compute numbers. So where are we? Well, let's go and look. Now we only have 1,080 left, and that's 311. But remember what happens. Bit O declares on 7/31. On 8/1 on Thursday, it drops by whatever its dividend, which we don't know yet. Tomorrow we're going to know before or after the market. I'm thinking it's before the market, but I really don't recall. So it's going to drop. Maybe it drops $1. So if it drops $1, could be $1.20. It could be somewhere from $1.50 to 95 cents, if you ask me, that it should be in. So, and it could be $1.60 for that matter. It's just really hard to tell because they don't publish any daily stuff. They're moving in and out of those futures markets a lot harder. So what you have here, and by the way, this is, whoops, this isn't even the right number. I need to update that. Sorry about that, guys. And the same thing here. This was a lot of activity to catch up on. Okay, so we're 1645, they're 2295. They could drop to 2180 and then we win. And I think that's why Yieldmax is waiting, right? They didn't have any money because they had to in order to spend all that cash to close it out. That difference cost them about 12 or 13. So when you go look at their cash, that's why you're seeing a negative, right? You're saying, hey, this thing dropped 23. It was about 24, but selling, buying back those calls. So that's what it ended up netting out, like a 23 million reduction. So sorry to go on, but it's a complicated subject. And if I don't tell you some of it, then somebody is going to ask. Many of you don't want the detail, but honestly, if you're going to own these funds, you should understand more. I'm not saying be an options guru and understand every synthetic and all that. So let's go into payout. Okay, so the net is they roll that big loss on the 35, and you see how by having that 35 enable them to just collect tons of money in the piggy bank, but always knowing they had a liability. It's one thing when Misty or Coney goes out, 2 or 3 percent above, or they write one a little bit. It's a whole different deal when it does it on BITO. And then, BITO, just like Ybit, is decaying, right? Its NAV is going down, but both of these funds are paying out a lot. So it's the classic, you have to look at it and expect it. You get spoiled when you get a Misty. But hey, I know people in Misty that bought it at 35 or 38 or 40, and they're having to wait on more payouts to get even, right? So there's no question. I think Misty hit as high as 45. I know it was above 40. So you do get NAV decay, right, when you're getting massive distribution. And then part of the deal is when these things run like crazy, you get capped, so it's hard. You're still going to end up positive. If you bought Misty at $20 and it's $29, then you're fat, happy, and you've gotten a lot of distributions. But that's why you have to direct cost average. And these income funds are complicated. They're not like owning the underlying, okay? And I understand why we don't chase the underlying. And, the underlying in Coney is a $240, $230 stock, depends on which day. And so far, the underlying in MSTR has been 14 to 1900. Okay, it's having a 10 for 1 on August 8th, so that'll help, but it's still not a 10, 15, 20, 30, $50 stock. So they're expensive. Relative, I'm not saying they're expensive, I'm just saying that the purchase price requires more money and the options margin requirements are high. Okay, guys, so where are we? 288. So we went from having a $2 gain to having a $2 loss. Okay. But we do have carry forward monies here. So I don't see any issue with them, but also paying a dollar here. I think they're going to pay this yield around 80. Okay. So it depends on where we are. Right now, we're at 1645. Okay. So where do we end up is going to dictate probably what they pay. I mean, unless Bitcoin just crashed, but and right now they don't have any more gains except for that 1080 contract, and that's built in here. And we're talking a small amount of money. We're talking like 40 or 50,000 that's at stake. So it's already in here. So, and also you have all these dynamics. So Friday and even possibly Thursday is going to be very fruitful if people buy in that they'll put on new positions. They haven't rolled or haven't put on their new weekly, and it's obvious they're sitting at 1080, right? They do have the ability to put on more and roll more, but they're going to wait and see what happens with BITO, the distribution, and get a clean shot at what BITO is really priced at. Because remember, BITO is their underlying. Okay, guys, I belabored that a little, but I said here we roll. The weeklies look okay. They look great, really, at this point. There's almost no way. But honestly, what do we have? We have nothing there. At this point. So let's just see what happens. If you're bullish on BTC, Ybit can make it. I'm even questioning being on top of BITO, but that's what they have. And in fairness to them, when they did that, as a reminder, BITO was paying a minuscule amount. They didn't really have to take that into consideration. Somebody asked me, hey, did BITO decide to do that to mess up Ybit? I think they want to keep their customer base. So paying more is just one method. But then their customers are going to realize they have NAV erosion. Somebody's going to go, oh my God, I bought BITO at in March when BTC was 63, 64, and I paid $30. Well, BTC is back above 63 and I'm 24. Then the BITO people, ProShares has to do the same thing that Ybit and said, well, how much income have you collected? Have you gotten $7? Add that back in and you got a plus 3 or 4, but not as much as you thought, right? You love the payouts, but this is a reminder to all of you. And I had this discussion with Sylvia, and she has to remind people, right? When you get high yield, you have to look at total return. In other words, how much I lost in the stock gain, right? Did I gain in my stock from where I bought it, or did I lose? If I lost, that's NAV reduction. But what's the total of my payouts? Add those two together, and are you ahead or behind? Now, it's disappointing for somebody to say, oh, I got a net 5% total gain. But I thought getting all those payouts that I was 50, 60% ahead of the game. Not if you had that kind of NAV reduction, right? And is it unrealistic to expect 100% return? Yes, it doesn't mean you can't get it for 12 months. It doesn't mean you can't get it for 18 months. But if somebody does a spreadsheet and says, I'm going to the moon, man, I own Ybit, and I'm going to have, $1 million in 4 years by putting 20,000 in, I think is unrealistic, right? Do I think BTC right now at 66,000 could go to $1 million in 5 years? It's possible. Might be 8 years. But does it have huge upside? Absolutely. So even owning an income fund, eventually through that rise, your NAV is going to be okay. But if you're collecting 100% or 80% yield every year and you're only losing 30 or 35 on the NAV, 80 minus a 35 is 45 last time I checked. So, guys, for the longest time, 6, 8, 10% is fabulous yield. Don't get so spoiled that you think that you're going to get 100% yield forever. I mean, everybody'd stop working. There'd be no workers. I mean, of course, there's people that don't even have investment money. But all right, guys, I've gone long enough. This is Bruce at Targeted Wealth Creation. This is not financial advice. I just went on one of my rants. Apologize for that. I'm not a financial advisor. Have a great evening. Bye for now.